Despite strong listings for residential auctions last weekend, clearance rates were down in the major markets of Sydney and Melbourne. It's all consistent with an overall downward move for house prices across the nation in the last quarter.
It's a buyer's market, with house prices starting to cool off.
The numbers of sales have reduced across the nation by, on average, 25%, but listings have continued to increase.
We seem to have a lot of hesitancy in the marketplace.
Buyers just taking a little bit more extra time to make up their minds on what they want to do and what they're paying for a property.
1.275, fairly bid now.
Clearance rates in the two major auction markets, Melbourne and Sydney, remain down on this time last year.
Yes, no.
Preliminary figures from RP Data show there were more than 1,000 properties up for auction in Melbourne last weekend, but only 60% sold. That's down from around 80% this time last year. And in Sydney, around 800 properties were auctioned with a clearance rate of 65%. David Airy, the president of the Real Estate Institute of Australia, says the slowdown began in Perth in 2009.
Prices have certainly softened in every mainland capital city and Tasmania as well, through more noticeably over the last 6 months, but in particular the trend has been over 12 to 18 months.
And as for claims that a housing shortage exists in Australia, David Airy says the opposite is in fact the case, and there is a significant oversupply of houses in the market.
I don't think there's been a bubble, and I don't think there's any bubble to burst. The indicators are that this has been a very slow softening, but with the huge increase in the numbers of established homes for sale, followed or added to properties off the plan sales continuing to rise, we've just seen a lot of stock which isn't moving.
The general consensus now is that lower prices will kick in for the next 12 to 15 months, and even the optimists are forecasting some lean times ahead for property investors.